Hey guys, Jason Whaling here, and I wanted to talk to you guys today about penny stocks. And quick disclaimer, I do not invest in penny stocks at the moment. As fun as they look, I think there's many other ways, less stressful ways to make money in the markets. And so if you clicked on this video looking for how to make $1 million, buying and selling penny stocks, this is not the right place for you. However, what I can offer you is a way to not lose $1 million with penny stocks. So a couple months ago, this was inspired because a couple months ago I had a client come to me and he wanted to know about a particular stock. This is ALKM, and I'll show you a live chart of it too. So this is kind of a quick analysis I did for him back in, back in October. So about eight, 9 months ago. And he just wanted to know, hey, I heard about the stock. I think it's going to do really well. I've been told it's going to do really well. What do you think? And I think this is a pretty common question. We have a newsletter or we have a friend. They tell us about this cool insider thing. Lost count of how many people are still waiting for AMD to go back up. But that's just part of investing. So I wanted to shoot this quick video to show you how penny stock pump and dump schemes work. And if there's one thing you take away from this video, if you don't want to watch, if you're already getting tired of it, do not follow advice of penny stock newsletters. There, I said it. Okay, that's it. We could cut, but I want to show you why. Here's why. This chart is something I put together a couple months ago. I apologize for all the writing here. I'll explain it. But I want to focus right here on this red line, because this is how these pump and dump schemes work, and this is what the newsletters actually exist for, either for promoters who are either going to cash in on giant price spikes by shorting or selling out the shares they've been quietly accumulating, or they've simply been paid by the company itself to just pump up the stock price so some of the insiders can sell. Either way, this is a really common pattern, and I'm going to show it to you live as well so you can see that it happens over and over again with the same stock, because there's no shortage of people who are trying to make a quick buck in the markets. This line right here, I'm going to just draw it straight down, is where the volume of this stock started to kind of go wonky. And this first bar here shows you right before I highlighted in this orange box, there is an uptick in volume. This uptick in volume is most likely the newsletter publishers buying. Okay, they're quietly accumulating shares here. And then they go quiet for a little bit, and this red line shows where they blasted out an email saying, hey, this stock is going to go through the roof. You're about to make, all your dreams are about to come true. And, even though you really shouldn't just, take advice from some random newsletter you subscribe to, especially when it comes to actual just buying companies, people get excited. They hear this great news. And the stock price, as you can see, just shot through the roof. And it shot up super fast. You can see this first blue indicator shows where the volume just spiked. And we can see the volume spiked. Volume spiked because everyone read the newsletter and went, oh my gosh, I gotta do this now before anything happens. So they jump in and they buy it. And what happens? The newsletter guys see the spike and they go, ooh, time to cash out. In this particular instance, my guess is, and I mean, I don't know for sure because I'm not inside the newsletter that did this, and it's not my place to tell you which newsletter either. But what it looks like what happened is the newsletter got a little overzealous. They sold out their shares a little too quickly. So the price then plummets right back down. But never fear, with a little bit of marketing and some large email lists and good affiliates, they were able to spike it back up a little bit. and it kind of went up and down, and you got a nice little, ooh, whoops, this is way too thick. You got a nice little uptrend here, as you know, it sits in people's inboxes. They read it a week or two later. They see that it's kind of gone up, so they get in, and then they tell their friends, and then it kind of just drips down because nobody reads their email the exact same day, maybe a week or two later. So that's kind of what you see. And then inevitably the price goes back down and continues to drop. And that's a real quick explanation of how these kind of pump and dump schemes work. Now, you would think that, hey, all right, this happened once, it's kind of over, right? And I'm going to show you this next chart from today, because I want to show you that this happens over and over and over again. They just use the same stock and pull the same thing over and over again. It spikes and then it drops. It spikes and then it drops. And this is all based on hearsay, because these small companies most of them don't have profits yet. This one in particular did not have profits yet. So every time some new development happens, the newsletter comes out and says, hey, they're about to get an FDA approval or something, you know, crazy like that. And that's where you see these spikes. And of course, people either wake up or the FDA approval doesn't come through and it goes down. So let's switch to the live chart here. So back over on Yahoo Finance, and we're looking at them. And as you can see, the price has dropped like a brick dramatically since my client first asked me to look at this. Now I want to show you, I was looking at it up around here, and we're seeing, and I'm showing you this big chart because you can see the same kind of pattern. We see dips and spikes, and then eventually just a long downward sad trend. And it's this constant pumping and dumping. We can see it in the volume down here. The volume, just these little bars at the bottom, tell us where it was promoted, okay, not so much. Promoted, okay, not so much. Promoted, okay, not so much. Now, if we go in and we zoom into, let's say, a 6-month chart, we can see that even though it's been dropping like a brick, people are still buying into it, thinking that the price is going to go up. So this brings us to the kind of conclusion of this video. Number one, please don't take stock recommendations from random penny stock newsletters that you have. I mean, you need to have something to fact check and double check whether or not their claims are actually true. It literally took me 10 minutes to figure out, when I was looking at it back in October, it took me 10 minutes going to Reuters.com to figure out why it had spiked in price. And I can almost guarantee you that every time this thing spikes up and down, that there's some quote-unquote reasonable explanation or thought process behind, hey, maybe this time it's different. And the 1-year chart tells you, no, this time it really isn't different. So there's the summary. Please don't take advice blindly from penny stock newsletters, and just do some basic homework to look at charts and say, hey, this is a long-term downward trend of a stock that's just dying. And that's why looking at a 1-year chart and then a 3-month chart and a 6-month chart give you a very clear indication of what's going on with a stock.